You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around these parts the option block. I guess it's known that worldwide, but we call it around here the option block just in case. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you guys are new to the program, first off, welcome, or indeed new to the network. Secondly, we got a whole universe of shows for you guys to check out on the old network, a total of 15, including this here fine program. The option block, nearly a decade's worth. Yes, wrap your head around that for a second. A decade's worth of options content. So crazy. I probably talked more about options than anybody else on the planet at this point. That might be a good thing to submit to Guinness. I'll have to look into that. But that said, a lot of great content for you guys, whether, of course, here for you active options traders out there, maybe looking for a financial advisor, or you are a financial advisor, want to learn about options. Maybe you trade futures options. Maybe you're a basic guy. You want to just have a breakdown of how these things work and have that just mainlined straight into your ear holes. We do all that fun stuff for you and a lot more, breaking down volatility. You name it, we have a show aimed at some facet of it. Easiest place to find it, of course, the flagship, theoptionsinsider.com. While you're there, look around. Got some fun stuff up there on the old site. Breaking news in the options market, a lot of it. Of course, we have a lot of analysis, unusual activity, our repopulated options FAQs section. Check that out. We're going to start adding more to that, and a lot of you guys have asked for that, and we kind of let it sit there for a while, so we're going to start repopulating that again, answering your frequently asked options questions, and put it up there for your future reference. And of course, while you're doing all that, hit the Insider Radio Network tab, and your audio journey can commence. Of course, you can always find us the usual outlets: iTunes, TuneIn, Stitcher, so on and so forth. And also via the app stores on those places. So if you want the Google Play, you want the iOS App Store. I know you're all sick of the podcast app, so grab our app. It works pretty good. And of course, via the old Amazon Fire for all three of you out there rocking the Fire phones. Hey, we love you. We got a version for you guys as well. No matter how you listen to the show, of course, this is Thursday, October 6th, and we are streaming live via Mixlr as well. I always forget that one. So yes, streaming live via Mixlr, MIXLR, if you can. Join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, right there via Mixlr. You can stream along with the show, follow along. You can mock the Rock Lobster behind the scenes. Have all sorts of fun stuff. Have him take umbrage throughout the entire show, which is always my job, and it's always pretty fun. And of course, ask us questions, send in your comments, all sorts of fun stuff. We'd love to see you guys in there. And since he's already taken umbrage, I might as well bring him onto the show. Let's welcome on the aforementioned umbrage taker, a.k.a. Dr. Umbrage, a.k.a. the Rock Lobster, Mr. Andrew Giovinazzi. How are things in the land of umbrage, a.k.a. Maine?
I'm angry, but I'm okay. I am angry, but I'm not even very. Put it this way, it was so slow today. I had a client send me a picture of a dog rolling around going nowhere. That's how slow it was.
That's good times there in the land of the pit. You must be excited that you're so far up the coast. By the time, Michael gets to you, it should be a mere whisper of what it is down in the southern states.
Yeah, I'm kind of hidden behind trees and rocks and a cove, so the water has to come way, way up to make my life difficult here. But yes, I'm just far enough away, but hopefully everybody will be okay down there. And all of the news outlets that are always telling everybody to be careful, it'll be all for nothing like it normally is when the hurricane just peters out. So that's what I'm hoping right there.
Let's hope so. I mean, they certainly are taking a little bit more dire tone than they have in years past, with the governor saying, leave or this storm will kill you, which is pretty hard to take that the wrong way. And then saying also, if you do stay, we're not sending anybody in to save you. You're on your own. So, yeah, stark words there down there in the land of Florida. Should be hitting fairly soon, so hopefully you're right. Hopefully it is all direly overblown, and all the people raiding the shelves for water and canned goods, whatever, can return it happily, knowing it was not needed. And speaking a little closer to home and much more insulated from all things hurricane-related, a little sleepy hamlet known as St. Charles, Illinois, where we are joined by Uncle Mike Tusa from RCM Wealth Advisors. Uncle Mike, how go your hurricane preparations, sir?
Well, I have to say this. I've never experienced a hurricane in my life. I've actually been on TV as a storm witness. I've gone to help tornado aftermaths. Like my wife and I went down to Moore, Oklahoma a couple of years ago and helped out there. But hurricanes are something totally foreign to me. I've never experienced such a thing.
I grew up in New England, so we had a small smattering of them make their way up there over the years, but they were usually far weakened by the time they got that far north. So certainly not what they're dealing with down there in the southern states. So hopefully anyone listening down there, hopefully you got power, and hopefully you guys are hunkered down. And hey, take some time out of your day. What else you got to do? You gonna hang out in a shelter? Listen to us. We'll cheer you up and talk a little bit about the markets. What little was going on today. So without further ado, let's dive right into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was moving, what was shaking, what was lighting it up, or perhaps not lighting it up in today's activity. Most of the major indices almost literally unched on the day. I think the NASDAQ might have literally been unched. The Qs almost certainly were. The S&P up a handle or so. The Dow off a couple of handles. Nothing net to speak of out there. We were talking hurricanes just now. I was talking, a lot of people, for whatever reason, like to make their runs to Home Depot, not just for the lumber supplies to nail up your window. They also raid it for water, and I guess that's the place you got, obviously propane. So Home Depot does fairly well in these types of environments, and their stock reflecting that today. One of the few big movers on the day, up about 2%, nearly 3 handles, closing out at a little north of 130 today. They're averaging about 22,000 contracts a day. Today doing about 40,000, 3-to-1 calls over puts. So there you go. Home Depot, one of the few places feeling the love out there as a result of this hurricane. A name that perhaps not so much feeling the love out there, though, is our friends over there at Deutsche Bank, though. They're hovering right around the 13.5 level. So, again, kind of roughly unched on the day. It wasn't so much underlying movement that caught our eye today, even though they had a little bit of a range, but nothing too extravagant. It was more, they continued to talk over will they, won't they get a bailout? Will they need a bailout? It seems like leaning toward the won't they column, at least for now. People over there in the IMF and others saying doesn't look like they're at the stage yet where they need a bailout. And of course, it seems like the prospects of that $14 billion, that's billion with a B, dollar fine coming out of the U.S., maybe there's some light at the end of that tunnel there as well. So people saying today, perhaps Deutsche Bank maybe not needing a bailout after all. So we'll see. Of course, all that combined news, even the hurricane impending, didn't really seem to spook the markets too much. Not a heck of a lot, really lighting it up. Another one of our more anemic days of the year overall from a volume perspective. That said, Mr. Rock Lobster, aside from approving headshots and watching dogs roll around, what else caught your eye in today's activity?
A couple things. One is AT&T, Walmart. Those two names, AT&T's yielding 5%. I think that is everybody going to throw their iPhones away? I don't know. It seems like a pretty pricey. It seems like a great yield, and we looked at ways to sell some puts against it today to try to juice the yield a little bit, but I mean, there's how many cell phone players are going to be left, and they got to connect somehow. So unless Google figures out a way to just do it all for nothing, which I don't think they have yet, it looks pretty. So it seems like the market's doing weird things as far as they're not quite, there's sort of this interest rates are going up and it's going to hurt certain industries. So there's sort of the knee jerk, sell utilities, and really, how high are they going to go up? I mean, as some of the yields on some of this stuff are starting to get more interesting again. They had the big run up in the beginning of the year, and now they're sort of all petered back, which is, I think, a big reason why the market can't go anywhere, because big chunks of the market are just stuck. Financials are stuck. Oils aren't doing the big rally anymore. And, tech has been holding everything up or pushing, but all the other like consumer durables, dividend paying stocks, they're all kind of stuck. So we look at stuff like that. I'm like, man, that kind of looks cheap. AT&T at $39. It was what, 45 or 46 bucks at the top this year. I'm like, that looks really interesting. So we looked at that toward the end of the day. The strangest downgrade I've ever seen, Goldman downgrading Tesla. It's hard to believe that one. Which probably
I didn't know that was possible. Is there a downgrade option for that name?
I did not know. So that was like, wow. That was an okay little trade for us, but I just that one just was a strange one. Like, why now? Did they get shut out of the underwriting? It's kind of hard. You feel like there's some sort of spite downgrade coming out.
Isn't it funny how my brain was the same way? I went instantly to the cynical conspiracy thing. Oh, they didn't get a piece of the action. Here comes the downgrade. That's old school thinking amongst us. But you know what? Probably not too far from the mark.
I was like, hey, we could be as vindictive as anybody else when necessary. But I think the street kind of works like that. But so those kind of things, and the absurd level of October future premium. We have remarked on it all day. VIX October futures, October settling next week, $15. What the heck? What are they? So the only thing I can think of is this non-farm payroll number is taking on a huge importance, similar to the FOMC meeting we had last week from a pure vol perspective, when nothing happened. Nothing happened. The Fed said, we're not doing anything now. And everybody kind of knew that was going to happen, but it didn't keep the vol futures. They were pretty bid for that. And I think it's still holding things up now. You had an ADP number that was whatever. It was okay. But, we have growth. We just don't have great growth. But, I think the Fed, part of, I think, what's been sort of driving vol in the market just lately is the Fed said, okay, we'll have something in December. It'll be a token. There'll be something in 2017, and that will be it. And you've heard more snippets of Europeans, starting to look at the end of QE. You heard it from Japan. So these balloons have been coming out, and the market's still been holding up for the most part. So I think equities want this news to sort of things to go back to normal and sort of pretend that all that G7 paper that everybody seems to own that has really low yields, that's not a problem, and we're just going to raise rates anyway and see what happens. So maybe it'll work. Maybe the 3-card money will work. Every once in a while, it does pull the wool over somebody's eyes, and they go on, and life's okay. So it could happen.
It's a scintillating day on the street when the dividend yield of AT&T is a hot attractive topic.
And our clients liked it. We were looking at like a diagonal put roll. It was actually a 2-saw special.
Ooh, diagonal put roll. Now that's getting sexy. Now that's getting exciting. Tell me more, sir.
Yeah. Well, we looked at a D's put that you could buy, buying the 37s, and just keep selling the at-the-money put against it. You could have it financed in probably 2 weeklies, and then you just keep writing puts against it. So, I mean, if you want AT&T for the yield, this is another way to do that, but put a lot less of your hard-earned simoleons at risk, because mostly you just don't see the big. If I saw the big bounce, then maybe you'd buy a call or something down the road. But anyway, it was a quarterly divvy diagonal play. We do crap like that when we're really bored and we're looking for a way to make money that doesn't have too much risk.
Yeah, you can't sneer at 5%, particularly with the weeklies helping you out there. Get a nice little kick in the premium. The old juice for free. I know you're a fan of that, Mr. Rock Lobster. Even on days like today, that's scintillating. Speaking of days like today, we mentioned a Tesla. You're at that downgrade, kind of weighing on them today. It's back after flirting, rallying north of 200, back around that ever so elusive, important, call it what you will, level of 200. Closing today, 201 even, just about off about 7.5 handles or about 3.5% on the day. So yeah, not another not another banner day for Tesla, and of course doing a little bit more on the option side as well. About 105,000 contracts, about 20,000 or so more than normal. No bias to the option flow, which is kind of interesting. Usually a day like today, you see puts outpacing calls, but not so much. That said, Uncle Mike, we talked about a lot of interesting things here at Deutsche Bank, AT&T, put diagonals, who'da thunk it, to harvest yields, Tesla downgrades, all sorts of fun stuff. Hurricanes, not so fun. What was catching your eye in today's activity, sir?
Well, I mean, the rolling puts for yields on AT&T, if that's not exciting enough, I don't know what is. But a couple things. Oil crossed 50. I think that's probably the big story of the day on my radar at this point in time. With crude going above the 50 mark, we haven't had that since, I believe, mid to late June. That's a pretty key number. And so it seems like every time oil goes back down to the high 30s, low 40s, everyone says, oil's done. Time to short oil. It's going to ride down. Then it seems to come up. So with that, I think that's a big number to go through, 50. I mean, we'll see if it stays, but I think that's like how in sports, when a team that's an underdog beats a team that's supposed to be better than it, it's kind of like a statement win. Right now, this has been kind of a statement rally for oil, and we'll see if they can continue it at this point. They've been here before. This is a party with which they've been to the 50 party before a couple months ago, but now is the true test for the oil bulls to see if it can continue to go higher. The other thing that's lighting up my screen right now over the past few days has been gold getting the royal crap kicked out of it. That's kind of in my thank God I have puts on it section of my portfolio for clients. So with gold going down like it has, I think this, if not now, but maybe another $5 lower on GLD, it could be a pretty nice buying opportunity for the shiny stuff. And then the other thing that is kind of intriguing to me that we've been seeing lately is bonds are starting to finally come down. If you look at TLT, bring it up on my screen here. TLT, over the course of the last week or so, we've had a nice little drop in TLT, and we've been waiting on this for a while. I shouldn't say for a while. We did have an uptick in TLT probably a couple of weeks ago, and then now it went right back to the 139 level, and it came right back down to the low 130s. I think this is also, from a technical standpoint, pretty close to a key level with TLT. I think support would be a little bit lower than this for right now, but it does continue to drop. Not to get ahead of ourselves, I don't want to spoil it for Around the Block, but we always say this in Around the Block on Thursday before the non-farm, but we have non-farm tomorrow. And so I think that with all those things that I mentioned, tomorrow could be an interesting day. And just going into tomorrow, because of everything with which I've mentioned and all the potential of what could go crazy, I've taken a pretty decent amount of risk. I've kept a pretty good amount of risk off the table based on what I had just mentioned, looking to get back in possibly tomorrow, but for certain risk areas. But we'll see what the non-farm number brings.
Yeah, you mentioned in commodity vol. It's been interesting to watch that. We've, of course, been watching that a lot on our TWIFO show. Just also did an episode of LSFO with our friends at CME just a few hours ago, talking all things crude vol. And indeed, a little bit of, not as much gold on that one, more gold on TWIFO. But it has been interesting to watch. Of course, we've been waiting for the better part of 2 years now for that worm to turn out there in WTI, for this product to finally get some signs of life, for the call wing to get some signs of life. It's been pretty much all puts all the time for the better part of the last at least year and a half. It seemed like there was going to be some signs of life in that call wing, then it kind of faded after the OPEC rally. It seemed like last week it was fading a bit. Now that we're back up around that 50 handle, maybe these calls are looking a little bit more lively. So who knows? Lively, I should say. Maybe this is finally the moment, the catalyst, where the bulls are back out here in crude. We'll see. I know my co-host there on Twifo, Nick, he threw a wet blanket on all that talk. He said the skew was nowhere near yet ready for those levels. But I don't know. I'm starting. This is more life than we've seen out there in quite some time in WTI or even USO calls. So perhaps this is a sign of things to come. I don't know. Just personally, talking about put premium in WTI for the better part of 2 years, I could do it talking about a call or two. It might be a nice change of pace. And speaking of course, the shiny stuff, you're right. Gold vol was hitting not just 52-week low, like multi-year lows out there. Really was getting pretty anemic out there. And now this week, finally showing some signs of life over there. Listeners, you can follow stuff along by yourself if you're kind of curious about how all these commodities vol is shaking out. Go to cmegroup.com/TWIO, This Week in Options. That's the page they do for our program with them. And you get free access to all these reports that are really pretty cool. You can see for yourself at the money vol up pretty much about a handle and a half to 3 handles out in the front month. The front month, kind of hard to really call that vol. And then a little bit farther out, you're talking about anywhere from 3/4 of a point to about a half a point or so out there. So vol creeping up, the skew moving quite a bit as well. cmegroup.com/TWIO. You guys can check out those reports for free, all for yourself. TWIO, of course, This Week in Options. All right, let's keep on rolling now into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the funkier, the more dangerous, the more, shall we say, just sometimes dubious side of the show. Welcome, of course, to the Odd Block, the portion of the show where we put on our fedoras and our trench coats and bravely go where many in the marketplace are far, far too frightened to follow. Today, we'll kick things off in the realm of the financials with JP MorganChase, ticker symbol JPM, of course, closing today $67.87, pretty much mildly up on the day, but like everything else today, like a lot of names, unless you're Tesla or a few others, not moving a heck of a lot from an underlying perspective. Overall volume, pretty much right in line with its ADV. It's been averaging about 53,000 contracts today, doing about 56. So it wasn't overall volume that caught our eye, more so one fairly sizable and interesting trade out here. In particular, it was the ACK expiring on the 21st, so our regular old ACK. ACK 67 puts going up for a fair amount of size. Starting off one block over there on the Philly, put up as a buy right, 5,400 paper buy-in for $1.06. You know that buy right tag. If you're not, head over to our frequently asked questions section of our site. We break that all down, and we do that. You buy in puts, you're buying stock. So we saw these going up fairly delta neutral as the day went on. About another 700 or so piling into the tune of about 6,100 total on the day. Again, that first block going up for $1.06. These also, I said total of 6,100. Open interest, only 1,200 contracts here. So clearly opening, I'll have to see. I don't know where they got their stock print. Hopefully it was a favorable print. Stock rallying today, so that probably helped in their favor because the options they took it on the chin on the options side. These things went out 75 cents at 81, so they bought them for $1.06. So they're already off about 25 cents on these bad boys, if that is indeed the case. So hopefully, again, their stock print a wee bit more favorable. Looks like someone needs a little bit of some pop out here, a little bit of move out here in good old JPM for these puts in stock to really start making some sense. Looking back over the past year or so, this name has really been kind of vacillating around this level for the last few months. In the crazier part of the year, back in January, February, this name was, like a lot of names, substantially lower, trading about the low 50 handles, 52 to 54 or so range. So it has been on a significant upside run. Perhaps our friend here expecting a wee bit more movement here. This thing needs to really pop for this kind of long vol trade to make some sense. So he wants this thing kind of like the old bouncer at the bar. has got to go somewhere. Can't stay here any longer for our friend here. And as we're seeing that, at least I don't know where. Maybe Mr. Rocklopsy, where he got his stock print, but hopefully it was a favorable one to make up for the option print, which is not looking so good right now.
No, the stock print actually was a little bit lower. Let me pull it up. Where were you, Mr. Stock Print? Yes, it was like substantially below the market. I think 60, 67, a little closer to the 200, and where is that? 238,000. 67.33, so about 55 cents below.
There you go. I feel a little better for him now. I was kind of feeling bad for him when I saw those options. I was like, oh, hopefully, when they put up tied to something, there's a lot of wiggle room in those prices. So when I saw that option price, I was like, hopefully they wiggled a lot on the other leg for it. Sounds like they did, sir. So what's your take here on puts in stock in JP Morgan?
Well, I think there's something that seems to be about the financials, about rates, about. It's almost like they're like there's a bunch of minions in a bucket and they're all trying to get out, and somebody's trying to sit on the bucket and not let the minions out. And I think that whole thing is that rates can go up again instead of been going down. And I think that's been keeping a lid on the financials. This looks like a play on, looking for a pretty good size move in JPM. They're buying earnings juice. That tends to hold up the vol longer for whatever you're buying. So I think they're trying to buy some stock. I think they're trying to buy some puts. And I think they're expecting some kind of sizable move when the dogs of interest rates, the hounds of hell or whatever are released and the financials can actually, go up again. So that's where I think this is, because they're all trading at just, they're just not huge multiples. JPM is yielding 2.5 and AT&T is yielding 5. 2.5 for JPM. It seems like that's some money, but it's actually probably a little better than that. It's closer to 2.8 or 2.9. But I am looking at yields on this stuff. I'm like, well. It's hard to say the market's overvalued when stocks like this are yielding what used to be a pretty decent treasury note, or it's doing a lot better. So it feels like the financials want to move. They just are looking for the right excuse at this point. So that's kind of where I am on this one.
Our friend here is certainly putting his money where his mouth is. And indeed a fair chunk of stock as well, thinking this thing is going somewhere. So maybe file this one in a to-be-watched category, listeners, if you are indeed of the same mind, as we move on to a totally different sector, from finance out there to big box retail, in particular the king, Wal-mart, ticker symbol WMT. Closing today, rear aggressive down day out here for good old Walmart, not feeling the love, off about 3% or about a little over 2 handles out there, closing shy of the 70 handle, 69.36 today. This is the name that does, as you might imagine, fairly decent paper. It is Walmart after all. So about 32,000 contracts a day. Today doing a fair amount more, doing about nearly 90,000 contracts, so nearly 3x their ADV. Surprisingly enough, 1.6 to 1 calls over puts, which is kind of interesting. And a lot of that volume probably courtesy of our friend here who decided to take advantage of today's sell-off, perhaps to do the old, usually we see rolls, listening on the call side, we see rolls up and out. Our friend here, though, looks like he's rolling a short call, so he's going down and out. In particular, it was the 2 legs, the NOV 75, so straight up regular monthlies, not playing around with any of those crazy weeklies. The NOV 75 calls going up, starting with, looks like paper buying about 7,000 and change of those, and then turning around and selling a strike lower. So the D's 72.5 doing that for about 35 cents and $1.02. Respectively. As the day went on, a little more size piling in to the tune of nearly 9,000 on the NOVs, and on the D's about 8,000. So pretty sizable trade, about 17,000 total of that 56,000 or so on the calls coming in this one sizable trade going up Going up on the SIBO, marked as a spread. Surprise, surprise. Open interest out here. There's decent open interest on both strikes, but not enough on the DEES. Only about 6,000 on the DEES versus the NOV is about 24,000. So clearly enough here to roll. And perhaps our friend may want to roll some more. Again, looks like he's buying to close the NOV, selling to open on the DEES. And as you look here, I said it closed today, 69 and a third or so. So that 75 strike, not exactly too relevant anymore. Probably faring pretty well on that trade if he got a decent amount for it. And now deciding to reestablish, keep that short on, but go a little bit closer to the fire to get a little bit more yield this time, going down. Not that much closer, 72.5. So he's not going down straight to at the money around the 70. He decided to play it a little closer, give himself a little bit more upside if he is indeed a long underlying holder, and just to go 72.5. Looking here at Walmart, and it has been in this range for the better part of the last 4 or 5 months. Certainly since early summer, this thing has been vacillating around the 70 handle, a little bit north, a little bit south. So it seems to be fairly range-bound right now, which maybe is why our friend is inclined to keep his short on. Mr. Rock Lobster, take us home. We're not take us home yet. We're not done yet, but take us to our next name here, which is our friend looking to continue the yield party here in Walmart.
I'm thinking this is yield party. We actually looked at Walmart today. I guess they had the double whammy of they're telling the Justice Department we're not giving you $600 million, and of course the Justice Department is not going to like that, and they're saying, well, we're going to reduce our earnings a little bit. Maybe we don't see any growth, blah, 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 blah. They're doing the old Apple rope-a-dope thing, where they say, well, things look really bad, and then they report these great earnings. So basically Walmart tanked, which probably, it's had quite a run this year from the mid high 50s to where it is or was trading almost 75. And I think somebody saw the news, said, okay, I'm just going to close my 75s. I will move to the 2.5s and D's because I don't expect much to happen. And I'll take my, it's probably one of the Walmarts that own, I don't know how many millions of shares, but, they gotta pay for dog food for their pet dog or something like that. So they're going to write 7,000 calls and they're going to take their buck.
There are worse, indeed, there are worse places. Worse places to look for some yield, unless you're, of course, talking about the sexiest yield party, which is indeed, as we discussed earlier, AT&T. All right, moving on. This time, not so much the yield party as getting your juice for fairly cheap, but there is a yield component to that. I'm going from one side of the fence, from Home Depot, to another, which is Lowe's. Lowe's, let's see, ticker symbol, of course, LOW, and closing today about $72. So actually a little bit off on the day, so not feeling the commensurate love for the hurricane that Home Depot is. I guess people aren't going to Lowe's to stock up ahead of a big impending natural disaster. And what we saw, this is the name before we can get into that name that does about 10,500 contracts a day, doing a whopping 52,000 today, about 1.5 to 1 calls over puts. That should bring some attention to you, but that you actually would be mistaken if you thought it was all calls, because actually what caught our attention was some put love, in particular some ratio put love, a fairly tight ratio 1/2 put spread. It was the ACH, straight up ACH, no crazy weeklies here. Straight up ACH, 71, 69, 1/2, 69.5, 1/2 put spread going up. Looks like paper buying the 71 puts 3,000 times for $1.11. They're turning around selling 2, so selling 6,000 of the 69 half puts, doing that for 58 cents. So a slight credit, actually, about a nickel or so in his pocket. Not bad. That falls into your juice for free category, Mr. Rock Lobster. There's no open interest on either strike, so there's no rolling from one to the other here. This is pretty much what it appears to be on the surface. A friend of ours looking here to pick up some stock if it drops substantially lower, and then if it doesn't, if it kind of hovers here, no harm, no foul. Only about a nickel. Actually, he collects a nickel, so not exactly a big hit for him all things considered. Let's look back at lows here over the past year. It's been on a bit of an interesting ride. Again, like everything else, hitting its nadir back in February or so around the mid to low 60 handles, and it's kind of been rallying, got as high as into the low 80s a month or two ago, and since then, last earnings cycle really seemed to cut the legs out from under it and dropping it back down into the low 70s. So it's kind of been a bit of a wild ride for Lowe's over the past 6 or so months, and our friend here specking on perhaps a bit of a downside, and if so, he clearly is not upset with gobbling himself up some lows around that 69 or so level out there. And if it stays here, hey, he makes a nice nickel. Mr. Rock Lobster, take us home with our friend here doing 1x2s here. Not the VIX 1x2 calls, but the old 1x2 put spread here in Lowe's.
You know what? I was looking at this, and Home Depot rallied hard on this hurricane thing. I think it was up like almost $2.50, which is, it never moves $2.50 in one day. But Lowe's did not perform very well. I found this odd. And,
this would be the right segment to discuss it then, sir.
I know. Like, we had a 2% move in Home Depot.
How fortunate are you? You have a show purposely designed to discuss such things.
Such odd behavior. So I think they were trying to take what I would say is only as a strange sell-off in Lowe's into the face that everybody might need to buy lumber to do a hurricane thing, to rebuild if that is the case. And looking at this as kind of a free downside play here. It's not free, obviously, because there's margin and there's risk. No question about that. But they're trying to generate a little margin trade when Lowe's has not been looking good, and it could end up maybe plumbing the lows of the year, which is like in the high, the low 60s. So I think that's what they were doing with this one. And interesting trade. It's outside of the earnings cycle, so I think it's a way to sell volatility. I don't know if it's my favorite way, because this trade is not really producing a lot of credit for them. So it's a lot of margin that is tied up without a lot of credit against it. So it is a trade, but they're clearly looking for something that's going to slide a little bit. Like Lowe's is just going to kind of slide around and down. Maybe on a hard rally, they could buy back the shorts, but so.
That's a good description. It is a trade. It is a trade. It is a way you could possibly proceed in the marketplace if you were indeed so inclined. That's damning with faint praise, sir. But it does fall under your juice for free category, so it's not so bad. I do feel it isn't the biggest credit, but it's also not just going out and blasting out straight up naked put too. Obviously, with the put spread ahead of it, you get a little bit more cushion to the downside, so your break even is going to be lower than that strike. So there are attractive elements to it. I agree. The nickel credit isn't. Maybe a little more would be nice, but there are worse ways I've seen to come in and put on some underlying, like straight up buying it right now. That would certainly be a worse way. So interesting stuff here, interesting strategery. Speaking of some strategery, it's Thursday. It means it's time for Uncle Mike to come on board to dispense some options, wit and or wisdom. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block. This is indeed the portion of the show where Uncle Mike comes on down from the mountain, stone tablets and bubble pipe in hand, to dispense some options, wit, and or wisdom. Uncle Mike, we're heading into that old weekend. We got a NonFarms ahead of it, so that kind of throws a little bit of a wrench into the works of how these weekends usually play out. But regardless of what's happening, the weekends, nothing's open, but there's still risk on the table. So I'm concerned, Uncle Mike. I have weekend risk. I don't know what to do with it. How do I deal with this? Preferably using options, because it is an options show. But what say you, sir, on this very, very pressing topic? I can't sleep at night.
Oh, my gosh. Then you need to panic. That's the only thing that you can do, Mark, if it's that bad.
That's a good approach. I like that.
Yes. No. I want to go through weekend risk, how I look at it. And what I like to do with it to protect such things. So I really don't panic. The old joke that we have at the office, if we always say, if that's one of my clients on the phone, tell them there's plenty of reason to panic and hang up quickly. So see, that's what really goes on at the office when you guys are about to, for my clients out there that are about to call. So how do we make it so we don't panic and we can handle the risk? I don't mind risk if I can do something about it during the day. The thing that I cannot control is gaps. So an intraday gap, that's something that there's certain things that there's just nothing you can do about. So you have to prepare yourself for what you can't do anything about. And what you can do things about, you need to be able to have the iron stomach, so to speak, to take action when need be and not be a deer in the headlights when you need to do it. So first off, let's talk about the risks that you need to be prepared for that you cannot control. The first one I want to go through is AM settlement. If you're trading an option that's AM settled and you're short that option, don't take it into settlement. That's one where by doing that, you can't control it. If you're taking on what you feel is a risky option position, but it's during the trading day, well, you can get out of it. You have the control to just click the sell button or the buy button, whatever the case may be, and you can take action. You can roll the option, you can hedge it, you can buy some underlying if you need to. Whatever you can do something. However, if it's Thursday night and you've done nothing and you're going into settlement on Friday morning, you're totally at the mercy of the unknown, and that's not a good feeling to be in. So the first thing that I would recommend is close out your short options before settlement. And that also holds true if you're just doing a standard equity option to where the option expires on Friday afternoon. Buy it back for a penny. We've beaten this horse a million times on the show, but just once again, I want to go through that. Now, let's talk about the weekends. I've talked about how you have no control during settlement. Well, over the weekend, you really have no control because of the fact that markets aren't open on weekends. So what can you do to kind of have the ability to sleep at night, as Mark says, and to not panic and not dream about all these horrible things that are going to happen to you over the weekend and actually be able to enjoy your weekend? I mean, what the heck? It's Scarecrow Fest in St. Charles this weekend. I don't want to be in a lot of short premium over this weekend, by gosh. So with that, there are a couple things that you can do. The first method is just to be in cash over the weekend. Most of the time, if I'm able to, I'd love to be in cash over every weekend, now always for the rest of my life. For my short-term trades, how I talk about doing some weeklies on the show, I make every effort possible to not be in over the weekend. I've talked about on the show before, for those of you wrestlers out there, what's the best way to get out of a double chicken wing? Well, the best way to get out of a double chicken wing is to not get into it in the first place. And that's the best way to avoid weekend risk, is just to not take on any, put it all in cash over the weekend. If all of a sudden the IMF announces something over the weekend and something crazy happens, well, you don't even know where you're at by looking at the futures. So while watching the presidential debates, you could see the markets go up and go down by watching the futures. Heck, if it's Saturday night, you got nothing. So the best way to avoid that is to just come up with a plan or a trading methodology to not be in the market over the weekends if possible. Now, I'm a longer-term trader in a lot of ways, in that I'm doing more longer-term hedges, and I'm looking to have it so that I can make sure we have more longer-term exposure to the marketplace, make it a little bit more stable, whether I'm doing this with gold, with SPY, or hedging our strategic night funds, or things to that nature. Well, this is where the collar comes into play. Now, what flavor of collar works best for you? The knockout collar, the traditional collar, the leap collar, the near-term collar, the 1 month put, 6 month call, or I'm sorry, the 1 month calls with covered calls with the 6 month puts. They're all different flavors, but it's all the same. It's all ice cream. What I mean by that is that by having your larger holdings hedged in one way, shape, or form, then all those horrible gap downs, all those horrible things that can happen over the weekend, you still have Mr. Put option. Remember, folks, the put gives you the right to sell the underlying at whatever price you have, whatever the strike price is that you purchased. And by doing that, if we have another 9/11, For those of you that were short premium going into 9/11, well, obviously you were sweating it out for a few days. But for those of you who were long an option that was 3 months out, maybe you're long stock, long put, and the put option was at least 3 months out, then, well, it didn't really affect you. But for those of you that had the short options, then that was something of which to be concerned. So those are some of the methods that I like to use to make it so it's not much of a factor to me going into weekends. I think weekends are the most dangerous time over the course of the entire trading cycle. We've talked about on the show how if you're long premium going into the weekend, some people think, oh, I got to take on those 2 days of time decay. You really don't, just because of the way that the volatility is priced into it. We've talked about that on this show a lot. So in a lot of ways, I think you are better off being long premium over being short premium going into the weekend, because if something really bad happens, then all your risk is the defined risk of owning that option. Whereas if you're short a put or naked a call, whatever the case may be, well, you have significantly more risk going in the weekend, and the benefit that you get from it, in my opinion, doesn't outweigh the risk. So with that being said, hopefully that can help you, the listeners, out in terms of how you can take on weekend risk. And that is one to grow on for today, October 6th.
Thank you, sir. A lot of growing to be done here on the old strategy block. If you have a question about strategy, let us know. Speaking of questions, we got a little bit of time. I wouldn't mind squeezing one or two listeners in. So without further ado, let's jump into a quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know how to hit us up at Options on Twitter, or the Options Insider on Facebook, Options Insider on StockTwits, questions at theoptionsinsider.com, or via the website feedback form, or those of you streaming live can hit us up via Mixler as well, just like our friend here, Trader Anki did with an interesting live question, and I wanted to see if I could squeeze it in because it is kind of timely. This one comes, he says, I'll try to condense it here. So I have a question or case study on informed trading ahead of an M&A announcement. It's supposed to be for Monday's show, but I wasn't able to tune in live. Well, lucky for you, we're going to do a quick mail block today as well. He says, the timeline of events since Friday. He's talking about Cabela's here, Taurus ticker symbol CAB. They had a big deal recently. They closed at $54.93 on Friday. It was announced on Monday that Bass Pro Shops will acquire Cabela's for $65.50 per share in cash. Cabela's opened at $62.98. I attached a snapshot of open interest book for CAB on Friday's close. I wish all of our questioners could be so detailed. He goes on to say, as it can be seen, we have heavy call open interest at the October expiry, whopping 9,187 Dees 60 calls also open on Friday. Dees 45.50, he puts out of the money put spread here. Over 5,000 contracts. He puts in parentheses, perhaps used to pay for some of the costs of those D60s. What are some of the telltale signs that would make your antennas go up and make you believe this is informed trading? I would also appreciate if Andrew can chime in as well. He did include a great chart here. I'll make sure I put it in the show notes, listeners. You guys can go pull up CAB. Look for yourselves. I was actually doing that just now as this question came in to kind of see what's still open out there. And surprisingly, a fair amount of this open interest is still open. The OX 65, there was about 5,000 open. There's about 4,000 still open today. There was about 6,700 of the 52 halves, 5,400 of the 55s, all of those deeply in the money. Again, Cabela's closing about 63.15 today, and about 6,200 still open of the 52 halves, and about 4,700 or so on the 55. So a lot of this paper may be getting the old freeze from the broker saying, hey, we want to investigate this a little bit. I did have a chance to dig a little bit into Friday's paper when this message came in. We did not see a ton of paper going up on Friday, so this wasn't extremely last minute, very suspicious paper, but instead it seems like very, shall we say, well-timed, well-placed open interest. Going back here at a chart, like he says, almost 10,000 of these December 60 calls were open. Looking back a year here on Cabela's, that 60 strike has been nowhere near in play for actually back the last couple of years. To have to go back all the way to about... not even back into March of 2015 or late 2014. It flirted with it about 59, end of 2014, but it hasn't been at a 60 in about a couple of years. So the notion that someone would come in and load up on nearly 10,000 of these You're right. It is, shall we say, dubious, to say the least. I have to have a chance. It just came in. I haven't had a chance to really parse the paper and see for myself exactly when this went up, if any stock went up with it. But the strikes alone, you're right, are kind of dubious. We've done a lot of studies on this. We had our big unusual activity forum a few years ago that shows that options activity ahead of known, and in this case, unknown events, spikes in options activity is probably one of the best indicators there is of something is afoot, and also that information leakage is very strong in the marketplace, because we see huge spikes in options volume, actually bigger increases in options volume ahead of unknown events than ahead of known events like earnings announcements and things like that, which implies that there is still a lot of information leakage out there, and the options market is the place they would do it. This is very fascinating. I like the 5,000 lot out of the money put spread to use to finance maybe the D's calls. I want to take a chance to dig in this a little bit more, but Mr. Rock Lobster, you're mentioned here too. We got to wrap up soon, but your thoughts here, and maybe we'll talk about it a little bit more on Monday. We've had a chance to parse it a little more.
So dubious activity is one. Normally, two is one of the best ones is volume versus average daily volume, like you said. You know, stocks that are kind of sleepy tend to be sleepy. They don't. Every stock has a personality. Microsoft trades 300,000 contracts a day, so it's hard to really get any real unusual activity in there. But something like Cabela's, smaller names that really don't have a lot of option activity, when they all of a sudden are trading a lot, it kind of changes. I think there's some game theory on how that changes the odds, or that is game theory on how it changes the odds a lot, because people are placing different bets. So that you want to look at. You also want to look at things that aren't really possible. So I go under the assumption that people that can buy 10,000 lots aren't stupid, although there could be some, but they generally are looking for things. They'll either take a very, very cheap shot that has a low probability, high return, but for the relative dollars for a fund, it could be very small. So for them to buy 10,000 dimes or something like that is not that big of a deal. Overall, if they do it like 20 times, 2 of the 20 hit, that justifies the game for them. They can keep doing that type of game. So for something like this, when you look at, say, well, that's just not even within the realm of possibility. But you got to get kind of the entry price. So what's important is you might see the open interest, but the key is you have to really see entry price and what that did. And you use the current market prices as your value. So did they, what I'd say the phrase I like is, did they fracture the liquidity? Did a stock that only trades 400 or 500 contracts a day, somebody comes in and trades 10,000 or 20,000 contracts, is that enough to mess the liquidity around enough? And the person, if they did buy calls and sold put spreads, it's smarter, because what they take away in contracts on the 60 side, they give to the liquidity provider on the 50. So it essentially, the liquidity provider can put that on, and they can buy just a buttload of stock against it, and they have the 50-60 call spread essentially on a ratio. So even though, their 60s didn't do so well, they had a pretty good ride from, they had a really good ride from, let's say, $50 to 60 on their long stock, so that it gives them a chance to sort of break even. That's how you can get some liquidity done if you want to take a delta like this. So like I said, it's not normal for somebody to probably dump 5,900 calls at the 50 strike. 5,900 puts. So given those basically three things, you want vol moving, liquidity, you want to see price. Are they going through the market? Are they doing things that are statistically improbable? On size, you want to look at that kind of stuff, and also how much over is it changing the character of the sort of the normal volume flow of the name? Those are all little things that make your radar goes up. So at very worst, it's not a stock that I would want to go actively short at that point.
And it's certainly, you're right. This strikes to do. If I was a regulator, I'd probably at least take a second look at this. I think maybe since we're running long on time here, Mr. Rock Lobster, we got to dive into our final segment here. I wasn't planning on such a rich question coming in, but it was so good I couldn't pass it up. But maybe we'll table this and we'll do a little homework over the weekend. Look at when this open interest was opened and what price is it, and maybe we'll revisit it on Monday. Sound good?
I'll be here.
You will be here, and I'll probably be here too. I don't know what Dusal will be doing. We'll see what he's doing. Meanwhile, though, let's keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're keeping an eye on for the rest of the week into the old weekend. There's kind of one thing that's dominating. Well, actually, two things. First, if you are going to be in Chicago really quickly, I am going to be, and a lot of people are going to be, at the Outso, a leg to stand on event tonight, 6 p.m. in the City Winery. So if you're listening to this, probably live at this point, or maybe streaming via Twitter or something like that, then I'd love to see you there. It's a great charity. We hit them up on the network. We had a great discussion on what they actually do there. So coming up in a couple of hours, we'll be there. If you're going to be there, hey, we'll talk options. It'll be fun. Maybe we'll talk the Cabela's trade. Who knows? And aside from that, of course, their big thing coming up tomorrow is indeed the NonFarms. It comes up like clockwork, and it's coming up yet again. And it'll be interesting to see this one maybe a little bit more muted, because even if it is a huge surprise to the upside, what's the Fed going to do? Fed's going to sit on their hands through the election. I've yet to see a Fed, we were talking about this on the LSFO show today, I've yet to see a Fed take serious action going into an election cycle like this. So probably, if anything, not till Dece. So who knows? Maybe that will mute this, but you never know. The markets are a weird place, and NonFarms have certainly been pretty weird of late. That said, Uncle Mike, what are you paying attention to the rest of this week into the weekend, sir?
Well, just the non-farm payrolls, but just to kind of add to what you said in terms of the Fed, if Trump does pull it off and win it, it wouldn't surprise me if Yellen gave him a little bit of a welcoming present by raising rates and trying to throw a monkey wrench into the economy somehow. I don't know. I mean, they say the Fed's non-political, but I personally have a hard time believing that.
This is the time of year where that kind of puts that lie to it, doesn't it? Where these supposedly impartial economists, they all magically agree not to raise rates right around the time that they're getting a new boss.
Right.
It's weird how that works. All right, Mr. Rocklops, take us home. What are you watching for the rest of this week into the weekend, sir?
Just if these vol futures can hold up. I mean, I'm surprised, but it wouldn't be the first time I've been surprised trading. So I think the vol future staying up here it's surprising. And this, again, will go to the whole thesis of rising financials, rates probably going up. I think they're just the vol, is being held up just on the possibility of a weird number, not necessarily the fact that we're going to get one. So, and if not, that will be my thesis will be true, and I will make a couple of bucks, and I'll be very happy, and that will be Monday, and I'll have to try to do it all over again. So,
all right, before the Rock Lobster passes out on us, he's still not completely recovered from his recent bout with illness, listeners. We're going to wrap it up here. But, of course, one last time, really quickly, let me check back in with my cohorts, my partners in crime here. Great epic journey we had on the show today, starting off. I didn't even get to Twitter, all the drama with Twitter. We'll get to that on Monday's show. So many things to talk about today, even though it's a really quiet day. Deutsche Bank going crazy over there. And then, of course, all the other fun things going on there. Tesla getting a very rare downgrade. Of course, all the action in the odd block, including a JP Morgan and Wal-mart. And then, of course, head-scratching paper out there in Lowe's. Even more head-scratching paper in the mail block, courtesy of one of our listeners there. Of course, Uncle Mike breaking down the weekend and all fun stuff there on Strategy Block. And then taking it home with NonFarms. But before we go, Mr. Rock Lobster, what's cooking in the land of the pit?
We are get ready for next Saturday class. It'll be on volatility. It will be the end of October, which usually has some volatility in it. See that posted soon. Our live gold class will be starting in a couple weeks. So Mark and I will be teaching that live. It's option basics, but all the way up. And if you want to learn about volatility, about Greeks, about trading those things and using to actually analyze a position the right way, come to our gold class and you will learn. You will learn one way or the other.
At least you guys aren't infringing on my options bootcamp trademark anymore. My lawyers are about to pay you a visit.
No, we still do that.
Oh, well, there we go. I'll have to get my lawyers back on retainer now. After here, I thought you guys had learned your lesson from the last time. But all right, that said, we'll deal with the legal shenanigans off the air. Uncle Mike, what's cooking in the land of all things RCM Wealth Advisors?
Well, it is It is Scarecrow Fest this weekend in St. Charles, and I'm one of the few people that actually go there by boat. If you guys see me at the boat dock out there at the Fox River, if you find me, I will personally buy you an elephant ear or a lemon shake-up of your choice. With that being said, if you are looking for a financial advisor in any way, shape, or form, feel free to contact me, 312-212-3531, or send me an email at mtusaw@rcmfs.com.
There you go, listeners. Hit him up, mtusaw@rcmfs.com. I can personally attest he's a very pleasant fellow via email, so just like he is on the show. So hit him up, and maybe he too can roll your puts for you. Maybe take care of some of that weekend risk so you don't have the same problem I do where you're up at night and you're stressing. Don't deal with that. Let Uncle Mike do it for you. Let him stress and stay up. You sleep. That's what he does. mtusaw@rcmfs.com to learn more. And on behalf of Uncle Mike and the Rock Lobster, hopefully survives the weekend. Seemed like he was doing good there. Then he seemed like it caught back up with him towards the end of the show. Hopefully he survives until Monday. We'll wait and see. And indeed myself. I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, grabbing us via the app, however you get the program, including all you streaming live, sending in such great questions. Don't get a chance to get to a lot of them on Thursday's show, but I like to squeeze a few in every now and then, particularly when they're very timely. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.